We're pushing up. Price is pushing up. But what does that mean? Where is it coming from? What is actually happening in the crypto market? Now, I know all of you guys and girls and everything in between want to know what is causing this bear market rally. And if we're not going to fully understand what's causing this bear market rally, then we need to try and understand whether or not we've gone into an uptrend or whether or not we are, in fact, going to go lower. Now, let me just quickly check that we're live. We are, in fact, live. That's good. That's good. Get your comments in. I'll do the shout out in just a moment. Now, it's we haven't had much volatility in the market over the last couple of weeks, and it's been difficult to stream. It's been difficult to bring content to you guys, but now we are getting some moves in the market. Obviously, Q4 has been quiet up until now. All right. Are we putting the highs in for Q4? That's one question that we have to ask ourselves. The other question that we have to ask ourselves is it the right time to be buying Bitcoin and Ethereum? Do we have any fundamentals that could potentially give us a narrative? We're going to find out today in today's episode. All right, we're going to find out in today's episode. First, let's do the shout out. Let's see who's in the chat. So I can see Nicholas Giroux at the top. Nicholas Giroux, he beats everybody at putting the first comment in. I can't click on your comment, my brother. And Federico as well. I can't click on your comment because it was just that early. But we've got Giles in the chat. Giles is one of the mods. He's one of my number ones now, along with Liz and Hafuel. So show respect for the mods in the chat. Okay, Liz, Hafuel, and Giles. Giles, bring us the ECB numbers if you don't mind once they're released, if that's all right with you. We've got Mamu in the chat. Mamu in my language means uncle from my mum's side, so Mamu's in the chat showing me some love. We've got Mr. Napes saying, not been able to make the last few streams, but I'm back now, so looking forward to this one. Yeah, hopefully it's going to be a good episode today. There's quite a few things that we need to talk about, especially when it comes to the Bitcoin chart. I want you guys to see something that I'm seeing on the Bitcoin chart, and hopefully that might help put some perspective into what's actually happening with the market. All right, Frederico, good to see you, my bro. Anyone care to speculate where Bitcoin might bounce up and resume to? Yeah, we'll talk about that. We're going to talk about that in just a few minutes. All right, Elizabeth, my number one, alongside Hafuel and Giles, says ready, fam. Good to see you, Elizabeth. Thank you for joining. Who else have we got here? We've got Microwave. Microwave says thanks. Same to you. Good to see you. Thank you for joining. Yusuf Kjo, good to see you, my bro. August says, hey, all Apple and Amazon earnings today. Yeah, along with ECB. That's true. JMO says, good morning and big green candle to 100K next week. Well, we'll find out in today's episode, all right? So stay tuned and we'll talk a bit about Bitcoin. I'm going to have to let you know now that I'm going to be bursting your bubble. But stay tuned anyway, all right? We'll talk about it. Make sure you smash up the likes, by the way, guys. We've got 20, 30 people in the chat. The numbers are growing up, but make sure you're smashing the likes, doing your part, and subscribing to the channel, all right? Vinny, good to see you, Vinny. Hello, everyone. Hello, NJ. Hope everyone has had a solid few days. Wishing you all plentiful profits. Lovely, lovely got a lovely community. You can't beat the NJ community, man. You just can't. You can't. Crypto Dad, good to see you. Crypto Dad says, good day, Ledgers. Hafuel, my number one. Good to see you, my brother. Phil the Flying Frenchman. I mean, it wouldn't be a stream, would it, without Phil the Flying Frenchman? We've got Lily in the chat. We've got Stephen in the chat. We've got Marta. Hey, Marta. Good to see you, my friend. Kwan in the chat saying hello. We've got Migs. We've got... everyone's putting in the ECB. No. This is FOMC stuff. All right, we'll talk about FOMC in a second too. Don't worry about that. Nicholas Giroux, I see you there. HJJ says, just re-listened to the ISO stream this morning. It was fire. Well, nice one, bro. I appreciate you enjoying the content. I really do appreciate that. It's a lovely comment. I love seeing comments like that. Passive Monster, good to see you, Passive Monster. And we'll do Svetsalav and Crypto Mac. Great to see you guys. Great to see you guys. Guys, keep the comments coming in as we go along in the show. This is an interactive show. I do like to see what you guys say. I do appreciate the opinions and comments that you guys have. All right. So let's dive into it. What is going on with Bitcoin? So let's have a look at this chart here. Now, to give you guys some context on this chart, if we zoom back out into yesterday's episode, no, not yesterday. Was it yesterday? It was the day before. All right. It was the day before. Now, the day before, I spoke to you guys about Bitcoin and I said, we've got a few levels here that are important to me as we transition into the finals of what I believe is the final stages of the bear market. there are only a few levels that matter to me here. All right. Now, this range that we've got below here, this is the range that I believe that we need to start preparing ourselves for. You know, as we get closer towards the end of the bear market, we need to start looking at buying opportunities for Bitcoin. All right. Positioning ourselves for the next bull market. Now, before we do that, we need to understand the pump that's happening now. So, if we zoom in a little bit more here, now, on the last stream that I did, you guys will see that I marked out one level above here. All right. This was in the last stream. And I said that it's possible that we could come up here, swipe this high here right into this supply zone right here. And we could start pushing down. So something along the lines of this. Okay. Now that looks horrible, but something along the lines of that. Now, what are we seeing? What are we seeing? We are seeing Bitcoin starting to push up. We're seeing that this range high that I've marked out here, this orange level that I've marked out here, it's not really being retested. And not only is it not being retested, it looks like we're not really ready to go into that level just yet. And we're not ready to really break down into that range yet. Okay? Now, I can see here already one comment says, why do you not go over trading setups like SC and XO? Well, look, number one, I am going over trading setups. I'm going over direction in price. And number two, I like to focus more on the fundamentals. I know I have a vision of where I want this show to go. And spamming trading setups will limit this channel's ability to really give you guys what I think you need. The purpose of this channel, for those of you who don't know, is kind of for people who are like-minded, like myself, people who were in 2018, the 2018 bear market, that didn't have the guidance that they needed. I didn't have the guidance that I needed in 2017, 2018, and I lost a lot of money. So I wanted to create a channel now in 2022 that could allow people like myself to have some sort of guidance, to have a sort of place that they can go to, so that when the next cycle comes, they know what they're doing, they're positioned, and they know the differences between the types of markets we have in a market cycle. All right. Now, again, I focus on the higher time frames, and don't worry about it. It was just a question. Don't get onto him, guys. Don't get onto him or her. It was just a question, and I appreciate the question. I appreciate the comments, and I appreciate the opinions. I answered the question. I think I answered it pretty decently as well. You know. So yeah. So again, look, so we're not ready to go into that range yet. So what are we going to do now? What do we expect for price? What are the levels that we are looking at for price? And do we have any confluence from this chart that could tell us where price might be going? So the first thing that I'm going to say is, although I've marked this level out, is there any sort of confluence that we can add to this level that I've marked out here? And now let me bring in Trader XO's famous EMAs, the 12 and the 21. Now, if I show you guys here, bear with me. So here we've got the red line. The red EMA is going to be the 12 EMA, all right? And the blue one is going to be the 21 weekly EMA, all right? Now, when we're looking at this on the weekly, that's the best place to use the 21 EMA, all right? The 21 weekly. Now, notice how this level here kind of really and truly confluences that 21 weekly. All right. Now, I don't know if you guys know about the 21 weekly. A lot of you guys maybe watch XO streams. Maybe you guys have seen Alessio Rassatani talking about it. But the 21 weekly is a very, very important level in terms of price. And the 21 weekly tends to hold up the trend in price. Okay. Notice here, whenever we have a bull market, the 21 and 12, they tend to get retested quite often. And they keep the trend. As soon as we broke below the trend, that's kind of how people caught the top. All right. As soon as we broke below 52k, a lot of people went short. All right. Now, price started trending downwards. Prices trended downwards. Have we really retested the 21 weekly EMA? No, we haven't. When was the last time that we retested it? It was here. Okay. And this falls in on April. All right. So now price is starting to push up. It's starting to look a little bit bullish. Where do I see price going? There are two places that I can see price going. Number one, we've got 21,500. Okay. 21,500 is a level that I've been talking about on this channel over the last couple of weeks. It previously was my line in the sand when we were going through this bear market rally here. And now we're back here again. Okay, so what I'm expecting here, if we go down to the lower time frames, let me just remove these EMAs here. Hold on. There we go. If we go into the lower time frames now, what I'm expecting to see for Bitcoin is either a push into target one, which falls in around here. Target one, which falls in around here, which is the 21,500 level. And at the same time, at the very, very same time, excuse me, let me go on the weekly real quick and mark out this block here. Let me mark out this block here like that. Let me go back in the daily. At the same time, what I'm thinking is we could get a push up into this supply zone here. All right, we've got clear supply here. What we can do, maybe something along the lines of this, push up here, find some resistance here, yes, but if we can get above something like this, something like that, that's kind of what I'm seeing. Now, we've already seen that the 21 weekly lines up with this plan. What else lines up with this plan? This week, we haven't really got much in terms of traditional market news. Last week as well, we didn't really have that much. Do we have anything in the next week that could potentially give us that break? Now, the first thing that I can say is, we've got FOMC. For those of you who watched the episode in the last 2 days, I think it was, we spoke about FOMC coming next week. Now, if we're going to look at FOMC, we can't just use the term FOMC and automatically assume volatility. All right. We have to look at it more than that. Now, FOMC, what's been going on with FOMC? Well, we've been having rate hikes. Agreed. We can all agree on that. We've seen it already. We know what they do, we know how they operate. Are we going to see another rate hike in the next FOMC meeting? And if we are going to see another rate hike, are we looking at 50 basis points, 75 basis points? Are we looking at 100, 125? What is your opinion? Let me know in the chat what you think, and I'll go over what I think in the meantime. Now, I personally think that we have enough fuel here to get to that 22,500 level. I do believe we have enough fuel. At the same time, this is not the only play we have to look at. We have to look at the second play as well. The second play that we've got here is price can do whatever it wants to do here, but once we tap into that 21,500 level resistance, if we break below and start showing signs of bearishness, okay, something along the lines of what we had here, all right, then what I'd be looking for is a push back down into 20,000 at least. All right, 20,000. Maybe we hold 20,000. Maybe we start pushing up. Maybe we do something like this. And then we get the breakdown. It remains to be seen. But we have clear directions for price. The two clear directions that we have 21,500 and we have 22,500. There's a good $1,000 in between that, which allows for good trades. All right. So once you've got the direction, that's when you can start using your patterns. That's when you can start going into the lower time frame. You see here, I'm on the 4 hour. Maybe we can get something. Maybe we can get a pushback into 20K now. I don't think we will, but it's possible. It's only $600 away. We can get something like this. And then we could push up into here, target one. That's genuinely the plan that I'm looking at. Okay, that's genuinely the plan that I'm looking at. Now, I think personally that we are going to get a 75 basis point increase. All right. Now, what does that mean? Does that mean it's bullish? Does that mean it's bearish? Well, of course, that means it's bearish. Okay, a 75 basis point increase has never in history been bullish for the market. If we were to get 50, that would give us enough fuel. I think the markets would get stagnant a little bit, and it may give us enough fuel to push even higher than what we're looking at here. All right. Now, given that the 21 weekly falls just above this blue box here, this purple box here, sorry, I do think that we've got clear resistance. The trend is intact. All right. If I remove all of this and if I go back to the weekly, if I bring up the 21 weekly, notice here that the trend is intact. All right. The trend hasn't changed for Bitcoin. And therefore, we have no real reason to get mega bullish on this. All right. Now, ask yourself as well, when you're looking at price, when you're looking at this type of context, ask yourself if this looks like a macro bottom. So we had a macro bottom here in 2020. We had a macro bottom, here in 2020, the March COVID crisis. Right here in sort of 2018, December, we had the beginnings of a macro bottom. Does this look like that? Not really, no. Okay, not really. We haven't really gone into accumulation yet, in my opinion. And notice here as well, if I bring back my ranges, you'll see here this initial black line that I've got here. This is the previous all-time high. Now, notice how we're playing around. We've not retested it. It's not been crazy support. What I'm noticing here is we've broken below it quite a number of times. And in fact, we're starting to tap this bottom range here quite a number of times too. So, given that we've got the 21 weekly right above it, given that we've got clear resistance, given that we've got a clear supply zone right here. For those of you who don't know much about order blocks, I would suggest you go and look into it. I think Trader Main has a very good episode on order blocks, so definitely go and look into that. He's a good friend. He's someone that I respect a lot in the space, someone that's definitely worth watching. Okay, so given that we have all those confluencing factors, if you are not a lower time frame trader, honestly, what I would wait for something like this to unfold. I'd wait for a tap into this supply zone here. I'd wait for a tap into the 21 weekly, and then I'd look to start building my shorts. All right, a break below 22K. You can start looking to add. A break below 21,500 is when I'd be looking for a shift in structure. And I think that's when we'd start rolling over. All right. Now, have we seen something like this before? Maybe we've seen it on Ethereum, all right? If I bring up ETH USD, there is a version of this chart that I like to look at. ETH has already tapped the 21 weekly. There is a version of the ETH chart that I really like, all right? A version of this chart that I really like. And I'm starting to wonder if we're starting to get similar price action. Now, the first thing that we have to take into attention is when we're looking at Ethereum is trading at a premium, all right? Ethereum is pumping a hell of a lot more than Bitcoin is. And, if you're going to go for longs, it's better to look at Bitcoin than it is to look at Ethereum, because Ethereum looks like a majority of the move has been capitalized, all right? Now, in terms of Ethereum, what I'll do is I'll remove this EMA here, and I'll show you guys something here. Now, notice that we've got this order block right here, and look at the similarities between this order block here, which is printed in January 2022, and look at this same one that we've got here in September 2022. So what I'm going to do is I'm going to mark out a level here. Okay, now I'll give this a different color. I'll put this in black so you guys can see it properly. And I'm going to look at this order block right here. Okay, now notice what happened with price here. Notice what happened with price. Look, let's look at this order block first, okay? Price found resistance here at the 3,400 level, all right? We rounded out, we came back above, and imagine how bullish people would have gotten right around here, okay? People would have said, well, this must be a deviation. Okay, this must be a deviation to the upside. Number one, we've got price rounding out. Number two, we've got price closing above resistance on a very big time frame, the weekly time frame. What happened though? Because we were in a bearish trend, once we closed below the 21 weekly, it was a signal that the market wanted to go significantly lower. All right, and that's what we did. Now, what are we seeing here? Does this candle here on the 21st of March look similar to the candle that we're getting here in the week of October the 22nd? All right. To me, it kind of is. All right. And if we do the same thing right here, is it this one? No, I'll go for this one right here. Now it looks like we're starting to see the same thing. All right. And I think SC covered this on his Twitter as well. But I remember bringing this up on my streams. I brought it up 2 or 3 times on my streams. Now, we need to think of it in the concept of exit liquidity. You know, when you guys are joking around talking about exit liquidity, we need to think of it from that context. All right. How do we generate exit liquidity? Well, we need to generate exit liquidity by if we're going lower, we need a lot of people to long. We need big money to be longing this market. All right. Now we've already got people getting super bullish because we've got this big candle here. If you look at the general sentiment, you'll notice a lot of people are showing bullishness. We are super bullish on Ethereum, on Bitcoin. I'm sure the same thing happened here where price broke above the 21 weekly. It closed above. Not only did it close above, but it closed above key resistance only to close back below. And it turns out that this was the deviation. Now, I'm wondering, are we going to get the same thing here? Okay, now that looks horrible, but the same thing here. All right. And when I say, are we going to get the same thing here? If we look at that from an order block perspective, once again, does that not fall right into supply as well? All right. Again, it falls into supply as well. So the same way we had this gap that was right here. Now, obviously, when it comes to context, it's always context over patterns. But once you've got the context playing, you can then start putting your patterns into trading. You've got your order blocks, you've got support and resistance, you've got your normal price action, but you need the context in place first. The context is we are in a downtrend. The context is that there is no real reason for price to go up to new all-time highs. Traditional markets aren't giving us a reason. We've got FOMC next week and we are all looking at potential, rate hikes. Therefore, what reasons do we really have to start calling for a macro bottom other than the ability to short the local tops? And I hope that makes sense. All right. So what I'm seeing here now is exactly the same thing. So if I was to look at Ethereum, how high do I think Ethereum could go? I think I'd be willing to accept Ethereum going as high as potentially even $2,000. All right. I'd expect Ethereum to do something like this, or maybe lower. It's probable that we're going to go lower, but I do think that Ethereum can go up to potentially 2K. And what would I see that looking like in terms of price? Well, if I zoom down into the lower time frame and we bring up what we were looking at here, this is what I think we could do for Ethereum. I think we could find some sort of, maybe we could press against resistance here, push up, find some support here, push up. Something like that. Okay. Now, in terms of a trend, you tell me, does this not look like a trend continuation play? You guys let me know in the chat what you guys think of this setup, because this is exactly what I'm seeing. And to be quite honest with you, I'm not even sure we go that far. I wouldn't be surprised if we did this. This looks more sensible to me. Maybe Ethereum coming up to the 1800 level, 1900 level, maybe 1800. 18 to 1900. That looks respectable to me. That looks like a pure trend continuation. Notice as well, we don't really have that bullish narrative in terms of what's going on in the market. There's nothing really going on that could signal a super bullish narrative for Bitcoin and Ethereum. And obviously, if we move over to the SPX very quickly, we'll see where this pump is coming from. All right. Is this a pump because crypto is bullish, or is this a pump because it's being led by equities? All right. Now, when it comes to equities, where are we? Where do we stand in terms of equities? We're looking at the S&P here. We've got a macro range for the S&P here. Where do we think the bottom will be for S&P? Now, I argued that the bottom would be somewhere between 3,200 and 3,400. All right. Now, arguably, I could be very wrong on that. It could be that we need to go just a little bit lower, and I'm willing to accept that too. All right. So what I'll do is from here is I'll mark out another level for the S&P. All right. I will mark out another level for the S&P because I do believe that we can actually go lower. I'll mark out this level here. Okay. And I'll change the color. I'll try and make it the same color. Is it that color? No, it's that color. No. Is it that? It must be this. Hold on. There we go. It's not exactly the same, but it'll do. All right. Now, what do I think for the S&P? Well, first thing is first. All right. we've got a very clear range here. All right. How did I get this range? Very, very simple. If we get the chart naked, if we look at price like this, we can see price is no longer moving in an upwards direction. It's moving in a downwards or sideways direction. So it was very easy to locate my range. Now, the range is above, obviously the levels below. You can see these pinkish levels that I've got below here. These pinkish levels are where I think the macro bottom for the S&P could be. All right, because you see, and again, I go back to a question I was asked earlier on at the beginning of the episode, where a lot of people right now are focused so heavily on trade setups, focused on the 15-minute time frame, focused on the 30-minute time frame, and I totally understand. I totally understand, because that's where I was too. In 2018, I was focused on these 15-minute time frames too. Now, I don't care anymore because I've seen the power of a bull market. During the choppy areas where you're trading the 15-minute, yeah, good on you. You made $1,000. Great. Very, very good. Fantastic. In the bull market, when you're trading a trending environment, when you're trading an environment that is where money is coming into the market non-stop, where liquidity is not an issue, and the market is producing absolutely insane gains, I'll make millions. Feel free to make your 1,500 or whatever you want to make now. If you're learning something, great. If you're happy, great. I'll stick to when the bull market comes and I'll make my millions then. And I'm sure for those of you who are more focused on the higher time frame, you guys will do the same thing too. One of the biggest mistakes I made in 2018 was purely focusing on price. I purely focused on price and I did not focus on fundamentals or global market conditions. And because of that, when the 2020 bull market came, I missed the first 4 months of it because I was a dickhead. I apologize for the language, but that's just where it is. I'm just being completely honest with you guys. All right. So when I'm looking at charts like this, I don't really care about what it's doing right now. I'm focusing more on where the macro bottom could be. All right. Why am I focused on the macro bottom? Because we've topped out since November 2021. All right. It's been nearly a year since we've been going down. And therefore, I'm not going to be looking for crazy shorting opportunities, albeit I do think one is setting up right now, but I'm not going to be focused on crazy shorting opportunities when price has gone from nearly 5,000 on the SPX all the way to 3,400. This is not the time to be looking at shorts. From a macro perspective, you need to start preparing yourself to position yourself now for potential buying opportunities. Every dip isn't a buying opportunity, but my friend, we've had many dips now. How low do you think this is going to go? All right. Now, when we look at the S&P, what am I looking at here for the S&P? We've got clear range levels to focus on. We've got resistance where we are right now, and we've got this level here, which falls in at around 3,950. And this is the level that I think that we can achieve. I think that we can get as far as 3,950. All right. And I think that this entire move is being led by equities too. So really and truly, what the S&P is doing right now is heavily correlated to what we're trying to do in terms of Bitcoin, Ethereum, crypto, and so on. All right. So with the S&P, I can see something like this. I can see something like, you see this high right here? Look at this high right here. This one right here. I don't know if you guys can see it. I've circled it out, but I think you guys can see it. This is the high that would get people bullish. This is the high that would make people think, yo, I think we've broken market structure. We've gone into a new range level. I think that we're going to start pushing up to maybe around sort of, 4,200? Yeah, 4,200. All right. So what I think could happen now, I think for the S&P, I think we could push a little bit further down here, come back up, do something like this, push up into this sort of 4,000 area, come back below. Once we get back below here, where everybody's thinking this is a pullback, but we're actually going to be pushing up, we'll know that resistance has been met. Crypto is going to suffer the same consequences. Then we can start riding it down. All right. We can start taking out each lows. We can start taking out this low here. We could take out this low here, ultimately this low here, and we can finally start looking to see where this low is going to be. For those of you who have seen my market cycles video, you know how passionate I am when I talk about market cycles. I love that theory. I really love that theory. It's the theory that I'm going to adopt and take into the next cycle. Whether I become rich from it or not, yet it remains to be seen. All right. It depends what you define as rich. I define rich as something a bit different now than I used to define it in 2017. All right. So for me, the way that I've seen this market play out over and over again, we've got Bitcoin that has 1 year of bear market, 1 year of accumulation, and then you have a year of bull market. All right. And in between accumulation, you have the exit of the bear market, which is where a lot of the money is made. All right. If you don't believe me, go and look at the market cycles video that I did. And also look on TradingView yourself. Have a look to see on the weekly timeframes, on the daily timeframes, what is Bitcoin doing? What has it done since 2012? And look at the cycles: bull market, bear market, accumulation, bull market, bear market, accumulation, bull market, bear market, accumulation. And now we're seeing the same thing. We're seeing the exact same thing. Bitcoin bull market, November 2020, November 2021. Bear market, November 2021. As we are approaching November now, I'm talking to you guys about finding the bottom. I'm talking to you guys now about looking for the macro bottom. If I'm talking about a bear market and looking for the macro bottom, then surely I must be referring to accumulation. So what do I mean by that? Well, look, it's very simple. If we look at this, okay, from a higher time frame perspective, it's not purely accurate, but just look. This consolidation here was the consolidation that sent the market to very, very new highs. Agreed? Therefore, if we're coming back into this now and we found some support off it already because we've bounced since we've tapped into it, maybe, just maybe, this could be the accumulation zone. And maybe we could do something like this for a year or maybe 6 months or whatever, okay? And then we can start doing this. And by the time this starts happening, nobody will even care enough to start talking about bull markets. Nobody will care enough to start talking about Bitcoin, etc., etc. As soon as we see something like this, that's the signal for risk on. We're going to do something like this. And by the time we get here, by the time we get to around this area here, that's when people are going to start saying, hey, bro, you heard about Bitcoin? Yeah, you know what? Bitcoin, I might buy some. Yeah, I might buy some altcoins. You're already 20, 30x up. You've been following the NJ show. You've been longing these altcoins with me. Not financial advice. Please don't contact the SEC for what I say. You've been longing altcoins with me. You've been longing Bitcoin and Ethereum with me because we timed the bottom. And this area here, this area where I've circled here, that's when people are going to start getting involved. You know, please don't fall into that trap of believing that you're going to become a billionaire or a millionaire from the 15-minute timeframes. Trading doesn't work like that. It just doesn't. And if you do think it works like that, then that's okay. That's okay. You're on that stage of the journey. I was on that stage of the journey too. I get it. I totally get it. All right. Doesn't mean you're not going to make it. It just means that you need a little bit longer to process and digest. All right. But for the 60 people that we have here in today's stream, I really believe that you guys all have the potential to do this. And when I say do this, I mean make millions, bro. Literally make millions. Or at least one. You can. You can. Notice as well, it works in terms of psychology too. When you're in a bear market, notice how everyone's broke. Everyone's broke in the bear market. You're working, you're not getting no bonus. All the traditional market news that comes out is bearish. Bills are going up, taxes going up, energy prices are going up. This is all bear market type news. In the bull market, when I was printing money in the bull market. It cost £50 to fill up my tank. So not only was I printing paper, it was costing me less to fill up my tank. Now we're in a bear market. The market is not giving us crazy opportunities to make money like it was before, but it's costing me £100 to fill up my Golf R. It's costing £100 to fill up that tank. So, you know, in a bear market, the psychology is there too. Money leaves you. Money finds a way to leave you during the bear market. And the accumulation period, it finds a way to get you to die of boredom. It finds a way to get you to leave the market, to exit the market. And what does the bull market do? Bull market entices you. It makes you think that every single dip is going to be the final dip. Every single push up is just one stage towards the next push up. By the time we were at 70K, people were thinking, oh, Bitcoin's going to go to 150. Look, I was part of that crew. I thought we were going to 100K. I didn't think we'd top out at 69K. What's that? What's that? Do you know what I mean? And in the next cycle, believe me, when Bitcoin is at 100K, people will be calling for 500K to a million. And it will be up to me. It will be my responsibility to make sure that I can guide you guys through the next bear market as well. All right? That's my job. That's what I'm here to do. I'm not here to focus too much on the 15 minutes. So, in terms of the S&P though, that said, these are the trading setups that I'm looking at in terms of a swing. All right. I'm liking the swings that are setting up. The swing that are setting up on Bitcoin, a tap into the 21 weekly, that looks good for me. Ethereum as well. If we swipe liquidity, I'll show you guys. I'll run through it one more time in a moment. If we swipe liquidity, that looks like a good shorting setup. And similarly, it adds up with the S&P too. So these pushes that I'm looking for on Bitcoin and Ethereum, they're quite equal to the push that I'm looking for on the S&P too. So watch out for this. All right, watch out for this. I do think it will be a good shorting opportunity, at least to 3,700, and then after 3,700, if we continue to break down, perhaps another breaking opportunity, another trading opportunity, or a continuation opportunity. So maybe compounding or something like that. But risk carefully, take it easy, don't rush yourself. Now is not the time to be aggressively trading. Okay, now is the time to start positioning. All right. So just a quick recap, a very, very quick recap. If we look at Bitcoin, this is what I'm expecting for Bitcoin. All right. Take your screenshots. Nope, that's, oh, sorry, weekly. That's why. Okay, this is what I'm looking at for Bitcoin. I'm expecting a tap into the 21 weekly. I'm expecting a push into this supply zone here. Whether we hold above or not, I don't think we're going to hold above. But even if price revisits 25,500, be careful. Be very, very careful. It doesn't mean that we are in a bull market. A lot of things have to really, really happen in order for us to get in a bull market. We need inflation to stop. We need it to stop. Okay? We need these rate hikes to reverse. All right, we're approaching 4%, 5%. We need to start looking towards going back to 0%. What can we do to get to zero? It's going to come. It will come. They'll have to find a way to fix this. Something has to change. All right. And we are going to look at that as we go into the next part of this show. We are going to look into what needs to change. All right. Now that's Bitcoin. For Ethereum, just to recap, is it Bitstamp that I did it on? Is it this? No, this is a different chart. This is a different chart, but it's exactly the same thing. Which chart did I do for Ethereum, guys? ETH USDT. Binance. Fucking hell. Look at this. Look at all these charts that NJ is doing. I was actually saying something like this. So we can use this chart then. We can use this chart. Something like this. That's what I'm thinking for Ethereum. All right. So there's your plans. There's your Bitcoin. There's your Ethereum. There's your S&P. We don't need to look at the dollar because the dollar. This is what I'm thinking for the dollar. Which is just a quick look. Make sure you are liking the video, by the way. If you haven't already, please do like the video. And if you haven't subscribed, bottom right hand corner, we are on our way to 5,000 subscribers. And I have an awesome show prepared for you guys tomorrow. So make sure you guys are subscribing. I've got a banging episode for you guys tomorrow. I'm bringing on both SC and XO. I haven't tweeted it yet. I haven't let people in the Telegram know yet. I'm letting you guys know now early so you guys can be prepared for it. All right. So if you haven't followed the Telegram, the link is in the description below. It's the first link in the description for Telegram. Make sure you're following that. And for the dollar, a lot of people are looking at the dollar and they're looking at a daily channel. There's this channel that people are looking at on the dollar, and it makes me laugh, okay? Because I'm looking at my channel here on the weekly time frame, where one candle on the weekly is worth 7 of those daily candles. Now, this is the channel that I'm looking for, and fuck this is what I'm looking to play out. Think about what I've said. Right? If you've got market cycles, you've got bullish, bearish, accumulation. Okay. So let's look at it from a Dixie point of view, right? You've got bearish, bullish, accumulation, bearish, bullish, bearish, accumulation, bullish, bullish, accumulation, bearish. Now, how would that look like on a chart? How would that look like from here? If I move it forward here, this is how it would look like. So we've got bullish now. Bullish looks almost done. Now we have accumulation, then bearish, accumulation, bullish. Make sense? And how does that look on this chart here? How does it look? It looks how it's meant to look. It looks exactly the same. A lot of people would draw this exact same chart out. Kids could draw this chart out, right? But they wouldn't understand what they're talking about other than it's following the channel. Now, this channel has been going on for around what, 20 years? Yeah, 20 years, 15 to 20 years. All right. So, distribution, by the way, N1, distribution and accumulation are the same thing. They're the same thing. When you're talking about distribution, when you're talking about accumulation, you're talking about sideways price action. You've got a trending environment and you've got a sideways environment. All right. The sideways environment gives you the hint as to which direction price wants to go in. And the trending environment is where you have the big moves towards the upside or the downside. All right. Example. Notice here that the bullish trend for the dollar, very aggressive. Okay, but what does the sideways price action look like? The sideways price action looks like this area here that we've got here. We've got a double bottom before the bullish price action, but very, very sideways. Okay, now obviously there were a few people that caught the crypto top. The people who caught the crypto top are the same people that caught the dollar bottom, because we've got that sideways price action here. Okay, and then as the dollar starts pushing up, once we broke above this mid range, was roughly around the same time we broke below 52K on Bitcoin. All right, so you have the trend continuation. Now, similarly, I'm talking about looking for a macro bottom on Bitcoin. Similarly, we've got accumulation for the dollar. I hope that makes sense. Anyway, I hope that makes sense. All right. Now, I'm going to look at some of your comments very quickly, and then we're going to move on to the next part of the show, right? So let me scroll up a little bit and look at some of these comments. Michael Caffrey, good to see you. Great to see you, Michael. Thank you for joining. August, I know August is always in the chat putting out good stuff there. Nice to see you, August. We are at 38 likes. That is just not good enough. That is just not good enough, NJ community. We've slowed down a lot on that. We need to get to 100. I don't know how we're going to do it, but that's what we need to do. We need to get to 100. So prop it up, NJ community. Bring it up. Let's get this together, all right? Giles here with the GDP price. Advanced GDP price index 4.1, while 5.3 was expected. So we're not seeing any growth at all. Of course, we're not. No one is spending in this market. Everybody's broke. Mr. Nape says ETH already beginning to look overbought. Yeah, so with ETH, I've got a plan for ETH. It could play out. Whether or not it will play out, it remains to be seen. But I do think we've still got some time. I do think we've got maybe a week or two left in this pump. I'm holding PYR. You guys know I bought PYR, right? I've mentioned on this show I bought PYR weeks ago. No, this is not my PYR chart. Well, yeah, we can use this, but it's not my chart. This is not my PYR chart. This is where I think PYR is going. I think PYR could get to that $8 level. I think that we're squeezing now. We are squeezing heavily into resistance. All right. We are squeezing heavily into resistance. So I'm not really longing Bitcoin and Ethereum. I'm just using them for confluence. I'm thinking that PYR is going to fill in this gap here. So I'm long PYR, and then we'll look for the shorting opportunities across the market. I don't think PYR goes higher than this. And if it does, I'm happy to be wrong. I'll just make more money then. It's cool, So that's my PYR chart. I think I'll show you my proper PYR chart here. This is my proper PYR chart here, where I've got the proper range marked out. So natural magnet here, we're starting to get expansion now on the weekly. Natural magnet is obviously going to be $5. I think we're going to get past that, and we're going to push towards proper resistance at around here. Okay? Here, hold on. Here. So we'll play the range as it is. But here, this box, what does it fall into? $8. Literally $8 exact. All right. So that's my plan for PYR as well. I don't know why I shared that, but just to show you guys that I'm long as well. My money's where my mouth is, What other comments have we got here again? Joel, it's good to see you, Joel. Thanks for joining the chat. I appreciate you joining. What's Liz saying? Liz is saying trying to trade both time frames, but yeah, the effort you have to put in now for small gains is crazy compared to what the market gives you in bull market. Yeah, a lot of people don't understand that. People are addicted to the gambling perspective of trading, and that's why they're so heavily focused on ranges and the 5 minute time frame. During the bull market, there was no one learning range trading. Everybody was talking about meme coins and longing altcoins, etc., etc., etc. But yeah, the market has its way. The psychology is there. A lot of people will come back when the bull market is kicking, and they will be the exit liquidity because they can't make sense of it. Sergo says, "Bumdia, good morning to you too. Good to see you. Thank you for joining the chat. We've got Hathawell here talking to engaging with people in the chat. Make sure you guys show some love to Hathawell as well, working hard in the chat. Gimbal says, I hope you'll be sharing the gems with us. Guys, look, no cap. No cap. I'm really excited for it too. When the market gives us that sign that we're going to go back into the next bull market, trust me, I'm going to be talking about altcoins every day. There's no point right now for me to talk about major altcoins and say, yeah, this is going to $500, this is going to $100 or whatever. This is going to be the next 100x altcoin, because I'll be putting you guys at risk. Do you know what I mean? But when the market shows us that that's what it wants to do, that's when we'll start looking at these altcoins. And I'm going to be talking about altcoins every day. There'll be so many altcoins launching on the market, so many new projects that want to aid and benefit crypto. And that's when I'll be doing those reviews. I'll make sure to do one every other day. All right. At the very, very least. All right. So you can count on me for that. I promise you I'll be there for that, unless I'm dead. That's a different story. Okay, so this is a good one. You can compound a small account over time for millions day trading. Yes, you can, especially if you're Trader SC. But how many people do you know that have done it? I've been in this space for 5 years now, and SC, XO, there's one or two other people that I can talk about that don't have Liz. Liz is one, right? But how many people do you know? Okay, I've met thousands of people in this crypto space, and I can only name 3 or 4 people on my hand that have done that. Okay, so there's, if you're a trend trader, then accept that you're a trending trader. Learn your price action if you want to learn it, and if you want to park 7 years on the side to turn your account into millions, then do that. Park those 7-8 years to do it. But doing it overnight, come on, you're dreaming. You're dreaming. Doing it in a year, you're dreaming. Doing it in 2, you're dreaming. Doing it in 5, yeah, if you're specially gifted, then yeah, I can see you doing it in 5. If you've got 5 years worth of trading experience and you've got an account that's worth 50K, I could see you bringing it to a 500K in a year and a half, 2 years. But let's be realistic. You're not taking $1,000 to $1 million. You're better off waiting for that trend, and then going with the trend, going with the altcoins that are printing 100x, 200x. If anybody's trying to trick you into believing that they're actually taking 15 to 20R trades, even if they are entering those trades, they're not entering with big risk. You tell me. Let me give you an example, because this is starting to piss me off. All right? Right. You tell me, okay? And I'm not bringing up any names here. I'm not specifically attacking anybody. But you tell me, let's say, for instance, you've got a trading account, okay? And you're saying that 1R is going to be 1% of your account. So for sake of argument, we're going to use $100,000. Let's say we're using $100,000 and your 1R is going to be $1,000. So every time price is up by 1R, you are up $1,000. In this scenario, you are up 12R. You're up $12,000. Your target is 30R. Do you really fucking believe for a moment that I've gone in with $1,000 worth of risk? Because my account is now up 10%, 12%, 15%. Come on. If you're into trading, if you've been in trading for a very long time, you'll quickly be able to spot the absolute bullshitters selling you false dreams. All right? If you're up 5R, and you're risking 1% of your account, my friend, you've made 5% account gain. And traders, real traders who play this game, who understand this game, they don't talk in R, they talk in account gain, they talk in percentage. So That's the major difference between your paid group leaders who are actually pushing for it and paid group leaders who are talking in R. When you're talking in R, it's very easy to convince the community that you are a superb, amazing trader. You don't need to show P&L. You don't need to show equity curve. You don't need to show anything. All you need to show is a couple of lines on a chart and say, look, 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 look. You see this trade here? I made 13R on this trade. I made 15R on this trade. I made 20R on this trade. No P&L, no proof, no account size, no percentage. But when somebody says, I went in risking 1% of my account and now I'm up 10R, here is the percentage of my account that works. This is how much I've made. This is the account growth. Here's my equity curve. Here's the chart. Bang. Shut up. That's how it works. And I know all of you people in the chat will eventually get there. I know you will eventually get there. I've been in this game long enough, my friends. And I trust me, I don't know you guys personally, but I do care about you guys because you've joined in to listen to me talk. So I do care. You know, each one of you are my friends in some way, shape, or form. All right? You're not fans. But just remember, I've been here long enough to know who's chatting shit and who isn't. And I apologize for my language. I apologize for my rant. Let's get back to the episode. All right. Now I'll take one or two more comments. And then we're gonna kick off. We're gonna talk about Jerome Powell. All right. To help us understand if my trade plans that I've got this week are actually potentially going to play out over the course of the next week. Because don't forget, next week we have got FOMC. We will be coming live for FOMC, by the way, to see how the market reacts. Maybe our targets hit by then. It's possible. All right. These are swing trades. So we have to be careful. Now, let's have a quick look at one or two more of these comments from my favorite people in the community. Guys, oh, we're at 50 likes, We're at 50 likes. Okay, good. We're getting there. Thank you, NJ community. Thank you very much. I appreciate you guys. Okay, Svet Solana says, Svet Solav, excuse me, says, do you think PYR will come back down to $3 or $4? I'll be honest with you, it's possible. You can set up a trading plan for $4. You can. Whether or not it's realistic, I don't think so, bro. I don't think so. Maybe. But, we've been pushing up. We're breaking out now. All of this looks like sideways price action, like I was referring to earlier on. It does look like we're going to start tapping 5 now. And it does look like we're going to see if 5 holds or not. All right. If the market tops out at 5, I'd be all out personally. Maybe I'll update you guys, not tomorrow, but because tomorrow we've got EXO and SC on. But maybe we'll look at PYR. Then. We'll get it from Trader SC. He's a million times better than me. All right. Frederico says sushi at $1.01. Yep. Crypto ISO called sushi on the stream right before it went crazy. Crypto ISO did that. So watch my episode with Crypto ISO. It's a fantastic episode. I really respect Trip. He's got a lot of amazing things to say. Let's have a look at one or two more comments. Oh, I love this question. Erquan says, just curious, how many trades are you making in a week now during this market environment? Bro, I think I've taken 3 trades in the last month. I ain't fucking with you. I've taken like 3 trades in the last month. All right. You can take trades that can evolve into big trades. You can. But just, I beg you, think of the psychology behind it. I promise you guys. Look, big man thing. Yeah. If you're up 1%, if you're up 1R and you're seeing 1,000, you're seeing 1,000 in green, $1,000. What can you do with $1,000 right now? There's a lot that you can do with it. What can you do with 10? What can you do with 15? And now you're telling me that people are trading, making 20, 30R, and they're up 30% on their account in one trade, and that's where they're taking profit. Come on, man. Come on. It's like I've taken like 3 trades this month. The PYR trade that I bought in down here. I was live when I bought in. I was like, yo, one second. I bought it on my phone. And it's been weeks that I've been holding this trade. And think about how much up and down for like 5R. It's like a 5 or 6R trade. You get what I'm saying? Bam Bam Bitcoin, welcome to the chat. Din, welcome to the chat. Good to see you guys. Thank you for joining. Could you potentially share some FX in the future? Says N1. Honestly, N1, nah. Yeah, we'll talk about FX in the future, as in if we need to, but I don't think I'm going to be talking much about FX. I love crypto way too much, man. I love Bitcoin. I love Ethereum. I love altcoins. Altcoins are my favorite. My dream isn't to own 100, 200, 300, 1,000 Bitcoin. I don't really care about that. My dream is to consistently bang out the altcoins. You see altcoins, right? When the altcoin market comes, this is my strategy. This is how I got my cars. This is how I got my dad and mum retired. This is how I did what I did. All right. When it comes to altcoins give you a very small window of opportunity. The Bitcoin market, it goes up, down, accumulate, up, down, accumulate. But the altcoin market, it's very, very brief. And when it comes, you have to capitalize because that's where the 100x come. If you tell me I put 1K into this new altcoin that came out and I sold it for 500K, I'd believe you. I'd believe you. If you put 1K into a trade that's on leverage and margin and you tell me you sold it for 130K, I won't believe you. I'll be like, all right, good for you, GG. Risking, you've made 30R on a trade. You got 30K now, GG. I'll see it when I believe it, but GG. I'm not hating. But why lie? Why can't you just be real? Like, where the fuck is your shame? You're a man or you're a woman or like, you know what I'm saying? Like, where's your shame? Where's your honor? I could never be me. Could never be NJ. You know? Anyway, rightio. That's all the comments. Let's move on. So just before we move on, right? I've given you a plan for Bitcoin. I've given you a plan for Ethereum. And I've given you a plan for the S&P. And notice how they all interconnect in some way, shape, or form. As well, we've talked about FOMC, which is going to be next week. Now, if we're going to talk about FOMC, we need to talk about our good friend, the Fed chairman, Jerome Powell. Okay? Which brings me on to this. Did FOMC hint at a pivot last week? All right? A pivot, obviously, you guys know what it means. Turn the car around in the other direction. Now, no, but yes, but no. Okay? Yes, because we're getting a bit of bearish relief in the market. We are. But we've ascertained already from the charts, we are still in a downtrend. All right? Now, let's have a quick look at this. I'm going to have a quick toke of my vape. I'm going to have a sip of my water and we'll look at this. Thank you for showing love on the live, by the way, Ledgers. I appreciate you guys showing love on the live stream and liking the video. And I can see we've got some subscribers as well. GG, welcome to the NJ community. Really good to have everybody on board. Really good. Rightio. Okay, so in terms of this, so on Friday, the S&P mini futures were down about 1%, and the US dollar was very strong versus most currencies, as we know it's been over the last couple of months. All right. Many have wondered for months what it would take for the FOMC to understand that the strong US dollar was a problem. Of course, the demand for dollars have come in partially due to these rate hikes. Okay, the demand for dollars is very, very high, and the spending is very, very low. Okay, so it's probably not a coincidence that the Bank of Japan aggressively intervened in the FX market, buying yen and selling dollars at the very same time. The Fed leak hit the Wall Street Journal online. The story was as followed by the following. Now, when it comes to this, right, when it comes to this particular sentence here, for those of you who follow Trader SC, you guys will notice that he's been trading dollar yen this week. When you can start reading things like this, you'll understand why he was trading the dollar yen. A lot of you people think that he was just trading it because of some lines. He drew some support and resistance. He's like, you know what? Yeah, this is why I'll trade it. No, he's way smarter than that. He knows a lot of things. Like he's very connected. He's one of the smartest He is the smartest trader I know. Okay, and I'm very close with XO as well. But SC is in a league of his own. All right. So anyway, yeah. So he was trading dollar yen and he smashed both the moves, to the move to the upside and the move to the downside. And this is what it's referring to. So I think the time is now to start talking about stepping down. The time is now to start planning for stepping down, said San Francisco Fed President Mary Daly during a talk at the University of California. The strength of the US dollar and the Fed's tightening policy relative to Japan, UK, Europe, and many emerging markets has had a major impact on financial conditions. We think they blinked on Friday. Now, it's true. It's very, very true. In terms of looking at a bull market, all right, the dollar has been in a bull market for the better part of a year now, all right? But can it be sustained? Is the question. And the answer most of the time is no, it can't be. All right. Similarly with Bitcoin, when Bitcoin was at 69K, yes, we topped. We topped and we saw low, low prices. We're seeing crazy prices on Bitcoin now. Some are speculating. Some are speculating that we can go as low as potentially 10K. Now, going from 70K to even 20K, that's a very steep drop. But it's just part of the market cycle. Can the bullish narrative sustain itself? Usually not. Okay, usually not. Now, when it comes to Bitcoin in particular, we've seen it in many cycles that Bitcoin could not hold on, and it's the same thing with the dollar. If we look at the dollar here, I'm calling for this exact same thing. I'm calling for accumulation to occur because this trending rally here, I'm not saying it's overextended, but we've had the bull market now. All right, it's if the dollar keeps going up, then who's going to make money off it? If everybody's longing, then where do you take profit? Because it keeps going up. Who's buying these dollars? All right. Similarly with Bitcoin, somebody had to take profit for this thing to start tanking, and at 70K, someone did. The powers that be did. They took profit and we started going into our bear market. Similarly for the dollar, it's all repeating itself. And I feel like a crazy man standing outside one of the train stations in London saying, Bitcoin's going to go up. Bitcoin, trust me, the bear market. Stop falling for the 15-minute time frame trades. I feel like one of them crazy man. And we can see Crypto Mac in the chat now. Crypto Mac knows exactly what I'm talking about. One of the perks of being my brother, you have to put up with my shit all day. You know? Show some love to Crypto Mac. He's my little brother. The same relationship I have with XO, same relationship he has with me. Show him some love. He's a very good lad. He's working super hard to try and grow his name, to try and grow his knowledge. Show him some love in the chat. All right. Now, it's the same thing with the dollar. Now, going back to this real quick, what we're seeing here in this article, we are seeing signs that although the pivot won't happen now, but we are starting to see signs, if you read between the lines, that the dollar, it can't sustain this type of rally. It can't hold up. Okay? So when it comes time to hedge your foreign exposure or not, having a view on central bank action and knowing what tools to use is important. The simplest example is exposure to a US index like the S&P 500 on a currency hedged basis or in local currencies. Now, what this is talking about is hedging. Now, I know a lot of you guys don't know what hedging is. There's a whole conversation in itself. But what I will say is, obviously, if the dollar is going to top out, right, we're more than likely going to see the beginnings of a risk on environment. Now, you have two types of environments. You've got risk on, risk off. Okay? Right now, we are in risk off. Risk off means you don't trade the assets that are very highly volatile. You don't trade the assets that are going to possibly cause you to lose all your money. All right. The less riskier assets, we're talking about bonds, treasuries, yields, blah, 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 blah. These boring ones, these old man assets. All right. So what do we need then to go into a risk on environment? Because a risk on environment, we're talking about Bitcoin, we're talking about gold, we're talking about the S&P. And if we're talking about S&P, Bitcoin and gold and whatnot, we're talking about altcoins. And altcoins is where I like to make money. That's where I like to get busy. I want to talk about 100Xs and 200Xs. That's why I'm doing all of this. That's why all of us are doing all of this. We want the 100Xs, you know? We are looking for that 500% account growth. We just need the right conditions to do it. Risk on environments. There you go. All right. So when you see words like this, when you see, where does it say? The simplest example is exposure to a US index like the S&P 500 on a currency hedged basis. It's saying, look, if you've been longing the dollar and you've got a ton of dollars, it might make sense to have some exposure to a risk on asset such as the S&P, because we might start seeing a lower, less volatility on the dollar and more on the S&P, and that might be where your account balance can start really growing. All right. So blah 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 blah. We continue the fall 2022 virtual roadshow, and you fuck off. This is, I'm sorry for the language, guys. I'm sorry for the language, but that's pretty much the most of the article. All right, that's the pretty much major part of the article which I've explained. I explained it pretty quick. I thought it would take a bit longer, but there we are. Moving on here, Jerome Powell again is facing political pressure as worries mount over the economy. This is a good one. This is a good one. I read this morning, and it helped me sort of understand a bit more as to sort of how we are going to go into the next FOMC meetings. All right. So these are the key points. This week sent a letter to the Fed chair, Jerome Powell, expressing concerns about the impact interest rate hikes could have on employment. So that's one key word there. We've got the interest rate hikes. We need to stop. Okay, we need to stop these interest rate hikes. But how do we stop them? How? We need them. We need more monetary pressure, monetary policies to pressurize the S&P, to pressurize the risk on assets, before we can start looking at things like the next bull market, let alone stopping the interest rate hikes. How are we going to stop them? We've been hiking them so much over the last year. We're not ready to go into an environment where it's completely bottomed out, but we are ready to go into a deflationary environment, and that's why we're starting to see news like this. So what am I saying here? Maybe it needs to get a tiny bit worse before it gets better. Now, potential job losses. In fact, I'll read this after I read the article. That's better. So, political questioning of Fed Chairman Jerome Powell about the central bank's policy moves is intensifying, this time from the other side of the aisle. Now, a couple of weeks ago, we came on live and we were talking about the UN. The UN sent a sort of memo to Jerome Powell to say, well, look, we can't continue increasing these, continue hiking these rates, because it's affecting the rest of the world. If we hike rates and the dollar starts pushing upwards, then the demand for the dollar is so strong that the rest of the traditional markets start taking a massive drop. Example, the pound. The pound and the euro took incredible drops over the last couple of weeks. The pound swung fail a 1985 low. Think about that. For those of you who are in the chat who are very passionate about trading and charts, think about that for a second. We swung fail a 1985 low. Crazy, insane. All right. Now, they said that to Jerome Powell. Jerome Powell obviously responds to say, look, we're doing what we think is best for the economy in order to get us back in a position where we can have another bull market. Now, these guys want a bull market too. Don't think these guys aren't making money in the bull market. They're not losing money in the bear market, but trust me, they make big money in the bear market too. I wouldn't be surprised if they were the ones that sold the top, Anyway, moving along. So it says it here. It is your job to combat inflation, but at the same time, you must not lose sight of your responsibility to ensure that we have full employment. A lot of people are losing their jobs, and already people can't afford what they have. We've had CPI. We discuss CPI on this channel every time CPI comes about. And when we talk about CPI, we don't just say, what is CPI? I've seen a couple of YouTubers that in the title of their streams, they put, what is CPI? They come live and they have no fucking clue what CPI is. They don't even explain it. Here on the NJ Show, we actually break it down for you guys in layman terms in a way that you guys can understand. And we also break it down in a way that you guys can understand how it impacts you on your day-to-day basis. All right. So CPI, when we were having these rate hikes during CPI, inflation, not rate hikes, sorry, rate hikes come through FOMC. CPI, where we look at the percentage increase of inflation, we've seen that we've had to budget more and more as the months go on. So say for instance you've got £1,000 that you budget every month. With inflation rocketing to nearly 10%, you'd have to now budget £1,100 in order to live your daily normal lives. And that's not just, your budget, but that's everything around you. Everything will cost more, and it's impacting everything, up to even the more expensive things like football players. Football players have become more expensive, and that's due to inflation. It's crazy. It's impacting everything. All right. So what they're saying here is, you know, not only will people not have enough money to survive, but now you're saying that people are going to lose their jobs too, because businesses can't afford to pay their employees because of inflation. It's costing businesses more to create their products, and they're not able to offset that. They're not able to offset that cost anywhere across the business. Therefore, the only way that they can get their money back, or at least retain profitability, will be through slashing employment rates. So we're going to have less people in the market with jobs and more people focused on spending more. So it's a lose-lose situation here. So that's what they're saying here. It's your responsibility to ensure that although you're hiking rates, employment is the same. Now, this doesn't even refer to shelter. Shelter is the one that's really off-ramping. Shelter is where a majority of the money is being extortioned. It's extortionate, sorry, is what I'm trying to say. Extortionate what the shelter market is doing. Rent is going bonkers, and so is the cost of houses. Cost of living is insane right now, higher than it's ever been. All right. So let's wrap this one up here. So the letter comes with the Fed less than a week away from its 2-day policy meeting that it is widely expected to conclude on November 2nd with a fourth consecutive 75 basis point increase. That would take the central bank's benchmark funds rate to a range of 3.75 to 4%, its highest level since early 2008, and it represents the fastest pace of policy tightening since the early 1980s. Okay, so think about it yourself. All right, if we're going to go up to potentially 5%, that's where we could potentially get to. That means we're going to need another 100 basis point increase, which means that the next FOMC meeting, when they drop this 75 basis point rate hike, that might not be enough. It might not be the end. But since we are approaching the end, now is not the time to be aggressive in terms of your bearish sentiment. If we are approaching the end, look at this. Look at this dollar chart, right? I'm saying we need to not pay too much attention to the upside of the dollar. The time to long the dollar was here in the 90s. The time to long the dollar was here when it broke 100. The time to long the dollar was here when it broke 110. It's no longer time to really focus on longing the dollar. Yes, the dollar can go a little bit higher, but now, especially if you're somebody who believes in Bitcoin, if you believe in Bitcoin, you're believing in Bitcoin for the longer term. Okay? The time now isn't to long the dollar into 120. The time now is to let the dollar do whatever it wants to do until it gets back into this channel healthily, until we see signs of a macro top and we can start riding it for this. I'm looking for a majority of this move. You see what I mean? But people are obsessed with money. People are desperate. The greed is taking over, and people want to focus on the lower time frame. It's all good. It's all good. But just to let you know, I'm focused on this. This is the big move that I want to catch, because that's when the rest of the market is going to go crazy. And it's the same thing with Bitcoin. So rather than focusing on, catching along to go up here, I'm not interested in that. I'm more focused on a macro top forming here, so that when the time is right and I've positioned myself in what I think is the lower for Bitcoin, the macro low for Bitcoin, I can start riding this move towards the downside. All right? Like that. That's what I think anyway. Anyway, there's not much to really talk about going forward. I can see a lot of chats in here. Thank you all for supporting the channel. Thank you all for leaving your comments and your chats. N1, I really appreciate you for putting all those comments in today. Ali Yunus, thank you for your comment here as well. Hafuel, take care of yourself. Have a good one. Appreciate you. Cleo Finance, good to see you, Cleo Finance. And what's N1 here saying? N1 here saying feels like pure shit. Just want 100 BP rate hike. Yeah, we're probably not going to get 100, but don't be surprised if over the course of the next 2-3 months we could see potentially those kind of increases. So maybe we get a 75 basis point increase for the next one, and maybe the one after that could be 75 again. But then after that, we could potentially see a minus 25. Okay, and that will be the clue. That will be the clue. We'll catch that here on this show anyway. This show is not just all about lines and drawings and false promises. All right, we will. In the interim, please do like and subscribe, by the way. Subscribe to the channel if you haven't subscribed already. Please like the video if you haven't already. Do your part. And if you are watching this recorded, I'm talking to you too. All right? Do smash the like on the video. Do subscribe to the channel if you haven't already. Tomorrow we have a sexy episode, which I'll be announcing shortly. All right? And I would love to see all of you guys and girls there. Take care, everyone. Have a lovely, lovely day. I hope you guys have a good one. Catch you tomorrow at 4 p.m. UK time. So it's in 25 and a half hours. All right. So tomorrow will be a later stream, but it's going to be a later stream because we've got SCNXO on. Amazing episode tomorrow. See you guys there. Take care. Have a lovely, lovely, lovely day. Catch you tomorrow for another episode of the NJ Show. Cheers, everyone. Bye.